Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 4th of June, so the markets remain largely in a risk-on mode, even though we've had some weaker than expected US economic data today. Both the ADP private payrolls report and the ISM services PMI missed expectations, adding to the manufacturing PMI miss we saw on Monday. The ISM services PMI just came in at 49.9, so below that 50 boom-bust level. 152.0 was expected, so that's a bit of a miss. Earlier today we had the ADP private payrolls report, which came in at 37,000 compared to 111,000 expected. So the ADP report certainly points to a weaker than expected non-farm payrolls report on Friday, which is now going to be the main data release left for the US dollar. Ahead of the US non-farm payrolls report, we'll have the European Central Bank rate decision tomorrow, which is now going to be the main focal point, and a 25 basis point rate cut is expected. Now it's all about what the ECB President Lagarde will signal about future policy decisions in light of weakness in Eurozone inflation data. Weakness in inflation data has certainly helped to boost the equity markets in the Eurozone, but it hasn't really weighed on the euro-dollar just yet. The single currency is holding its own quite well, thanks today to the softness in US data, keeping the US dollar under pressure across the board. Insofar as the euro dollar itself is concerned, well, we've seen this area of support between 113.50 to 113.90 being tested in the last couple of days from above after we broke above it earlier this week. So it has held firm for now anyway. For as long as this area remains intact, the short-term path of least resistance remains to the upside. Below that is this shaded area between 112.15 to 112.20 will come into focus. That's where previously in September 2024, the euro-dollar had found strong resistance, but we're now above that area and a bullish trend line comes into play as well there. So if the euro-dollar were to break below that zone, I think then we'll have the clearest sign yet that the euro-dollar may have topped. But we'll cross that bridge if and when we get there. For now, the path of least resistance is to the upside, and 115 could be the next stop for the euro-dollar. Now, as you can see on this watch list, most of the global indices are in the positive territory today because of optimism that the US and China will resume trade talks and eventually a trade agreement may be reached. The optimism is certainly helping the FTSE to remain supported as it continues to consolidate here in a tight range, awaiting a potential breakout above the March 2025 high of 8,910. That's the next key target for the bulls. Above that, we have the psychologically important 9,000 level, and then thereafter is clear blue skies, and it's anyone's guess how far it could rise should we get there. So the key question is, can it break away from the current congestion zone of around 8,810? That's a key question. And right now, the way the index is trading, it looks like we might be heading for a potential breakout either later on today or possibly in the next day or two. Unless, of course, the US-China trade situation deteriorates and we don't have an agreement between the world's biggest economies. Now, for more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.